Hello everyone. Today, we delve into a story that shook the financial world, Yasuo Hamanaka's. His stage was Sumitomo Corporation, a giant in global trading. At Sumitomo, Hamanaka wasn't just an actor. He was a maestro in the copper market, influencing its price like few before him. However, in a twist befitting a financial thriller, his career took a dramatic turn. At the height of his career, he was unmasked as the protagonist of one of the greatest financial frauds of our time. But how could this highly skilled and respected trader orchestrate such colossal fraud? What were the consequences of his actions, not only for himself and Sumitomo, but also for the global financial market? In the next few minutes, we will reveal the secrets behind his meteoric rise and spectacular fall. You will discover the strategies employed by Hamanaka, the pitfalls that marked his journey, and how his actions shook the foundations of global finance. Prepare to question what you know about power, ethics, and influence in the complex world of trading. This journey into the heart of this scandal could change your perception of international financial markets. And if you enjoy content like this, don't forget to subscribe, hit that like button, and turn on all notifications so you don't miss our upcoming video. Imagine a young man, armed only with his sharp mind and unwavering determination, walking through the doors of Sumitomo Corporation, a powerhouse in global finance. This man was Yasuo Hamanaka, soon to be known as Mr. Copper. When he arrived at Sumitomo in the 1980s, a company steeped in history and prestige, he was still an unknown, far from the spotlight of fame. But his potential wouldn't stay hidden for long. From the beginning, Hamanaka demonstrated an exceptional understanding of the markets, especially copper, where he would soon leave an indelible mark. His arrival coincided with a period when Sumitomo sought to strengthen its presence in the commodity market, and copper, in particular, provided a perfect backdrop for his talents. Each day at Sumitomo, Hamanaka honed his expertise and reputation in the copper domain. His ability to read market trends, almost as if he possessed a supernatural intuition, never failed to impress his superiors. In an environment often dominated by cautious and conservative strategies, Hamanaka's innovative and bold approach was a breath of fresh air, presaging his rise to a prominent role. His mastery of the copper market was becoming increasingly evident. Hamanaka wasn't just a talented trader. He became a key strategist, a pivotal player in Sumitomo's copper operations. It wasn't long before his impact on the market earned him the nickname Mr. 5%, a tribute to his presumed control of 5% of the global copper market. This title testified to his immense influence in the industry and marked his rapid ascent as a dominant figure in the world of commodity trading. But what was the key to Hamanaka's success that allowed him to rise to a respected star in the ruthless world of trading? Undoubtedly, it lay in his exceptional trading strategies. Among these, one stood out particularly: taking future positions on copper. He was essentially betting on the future evolution of prices, buying or selling massive quantities of copper on the futures markets. This approach allowed him to capitalize on price fluctuations, often taking positions contrary to the general market trend. He had a knack for identifying when the market was about to turn, whether upwards or downwards, and acted accordingly to maximize profits. Another crucial aspect of his strategy was his approach to the physical storage of copper. Indeed, Hamanaka wasn't limited to purely financial transactions. He also managed vast physical stocks of copper. By controlling a large portion of the supply available on the market, he could exert significant influence on prices. This stock management gave him a considerable advantage, allowing him to act as a regulator of supply and demand, and therefore of prices on the global market. Hamanaka was also known for his direct negotiations with copper producers. Rather than sticking exclusively to the futures markets, he dealt directly with mines and refineries, creating long-term contracts that stabilized Sumitomo's supply and gave it a competitive edge. These agreements allowed him to influence the copper supply chain, securing copper at advantageous prices for Sumitomo. These strategies, combined with his flair for the market, made Hamanaka an indispensable figure in the copper industry. He transformed copper trading into a high-stakes chess game, where each move was precisely calculated to maximize profits and bolster Sumitomo's position on the global market. His actions' impact was so profound that the price movements he caused were often referred to as the Hamanaka effect by market players. This strategic and bold approach to trading not only solidified Sumitomo Corporation's position as a market leader in copper but also propelled Hamanaka to fame in the financial world. However, behind the apparent success of his operations lay less commendable methods. At the core of these practices was a tactic of market manipulation, orchestrated with finesse that initially masked its illicit nature. Moreover, the implications of these actions reached far beyond what one might imagine. They deeply affected producers, consumers, and even national economies reliant on copper. And this was just the tip of the iceberg. Soon, Hamanaka's strategies would be revealed as the origin of a major scandal, shaking the global copper industry and market confidence. Indeed, in 1996, the financial world was rocked by the outbreak of a scandal of unprecedented magnitude. That year, the long-concealed practices of this copper trader were exposed, ending an era of deception and manipulation. An in-depth investigation even determined how he had exploited the London Metal Exchange to influence the global non-ferrous metals market. The LME, traditionally seen as a bastion of metal trading, found itself at the heart of this turmoil. The extent of Hamanaka's manipulations even forced the exchange to introspect, revealing significant flaws in its monitoring and regulatory processes. The need for reform was therefore undeniable. Authorities began a series of policy revisions and control system overhauls, marking the beginning of an era of renewed transparency and rigor. Beyond the LME, the impact of the Hamanaka affair spread throughout the financial industry, with particularly strong shockwaves at Sumitomo Corporation. Indeed, it was Hamanaka's direct action that led to colossal losses for the company, amounting to $2.6 billion. This financial disaster, directly attributable to his manipulations, served as a powerful wake-up call on the need for increased governance and oversight in the commodity trading field. Faced with this revelation, global market players, particularly those based in London, were forced to deeply reconsider their practices, leading to the implementation of enhanced security measures to prevent any repetition of such manipulations in the future. However, the story didn't end with just financial turbulence. Beyond the economic impact on Sumitomo Corporation, another chapter opened for Yasuo Hamanaka, personally more severe. What would become of him? The answer came shortly after the scandal's revelation in 1996, when Hamanaka found himself facing justice. Arrested and charged with fraud and falsification of financial documents, he was catapulted into the center of a sensational trial that captivated public attention. Nevertheless, once in court, he opted for a full confession, acknowledging his market manipulation of copper and his efforts to hide the massive losses. These admissions then confirmed the extent of his illicit activities and shocked both the public and industry professionals, shedding light on the grim reality behind his actions. Finally, in 1998, the saga's conclusion occurred. At that time, Hamanaka was sentenced to 8 years in prison, a sentence reflecting the severity of his acts and the devastating impact on the global copper market. This episode, going well beyond a simple judicial decision, generated shockwaves that extended beyond the courtroom walls to the entire financial sector. Hamanaka's conviction was not just an end to his career, it also marked a turning point for Sumitomo Corporation, which had to face significant financial and organizational disruptions. These events left indelible marks on the company and prompted the financial sector to reconsider its practices and principles. In this reflection, Hamanaka's story continues to occupy a prominent place. Even today, it resonates in the minds of financial players as a severe warning but also as a constant reminder of the importance of vigilance. This case thus underscores the necessity of maintaining integrity and trust as fundamental pillars in global markets and remains an instructive example of the potential consequences of inappropriate conduct in the financial field. In conclusion, the Hamanaka affair remains etched in financial memory for its profound impact and surprising revelations. It not only closed a controversial chapter in Sumitomo Corporation's history but also left indelible traces in the financial sector. The echo of this affair is still felt in current preventive measures and policies, illustrating how a single event can redefine vigilance and strategic approaches globally. More than just a historical anecdote, the Hamanaka affair continues to shape understanding and risk management in modern finance.